problem itself is not new. High-end vehicle manufacturers have always struggled with auto insurance pricing, especially those whose value prop aligns with safety. There's been a few approaches to this. BMW Group partnered with Swiss Re to develop a vehicle-specific rating that insurers worldwide could use to calculate BMW premiums, obviously trying to bring them down. Tesla itself took a swing at it in 2017 with its Insure My Tesla initiative. People still complained that the rates were too high though, so here we are in 2019, the brand spanking new filing full of mystery and intrigue. And yes, I did read the full policy. The core documents anyway, not the thousands of pages of simple detail. And I have questions. I was under the impression that Tesla was just insuring Teslas, but then I was reading through the covered auto definition and there's no exclusionary language to be found. It looks like I could swap out my Tesla with a Kia or Lamborghini a week after inception and it'd be covered as a replacement. And then the tables. 3,880 pages featuring every make and model under the sun. So I guess Tesla's insuring everything? I did reach out to Tesla for clarification, but they did not respond, which is pretty shocking because you'd think a little startup like Tesla with 3 products would want to engage with all the major media outlets. Remind me to send them a strongly worded email later. I also couldn't find detail on who their reinsurer is, which is also a pretty gaping knowledge gap. So as I film this, I'm operating under the assumption that Tesla will be insuring all makes and models and has secured reinsurance from a large, stable incumbent player. If that is inaccurate, please let me know in the comments. All right, let's dig in. The pros and cons of the Tesla insurance initiative. First, it attempts to solve an existing market problem. Tesla is famous for solving non-existent problems. They're really good at innovating and thinking outside the box. So far outside the box that they sometimes spend millions of dollars creating technology that no one asked for. Looking at you, responsive door handles and dancing car. Insurance, however, is a problem for Tesla owners. But does Tesla understand insurance? Is this a problem Tesla is set up to solve? Teslas are pretty expensive to repair. During the company's annual meeting in June 2017, Elon Musk said that an internal Tesla study found the average cost of insuring a Model S sedan or Model X SUV was lower than for other premium vehicles. I imagine this study factored into their decision to go down this path. So I'd be curious to know what data was pulled into this internal study and how it was sourced. No matter how you offer insurance, one principle remains. If you want to make money, you need to collect more money in premium than you pay out in claims and operating expenses. Though I guess making money isn't the same level of priority for all companies. And you also have to support the full insurance life cycle. Claims, changes, all the insurance touch points. As an insurer, your job doesn't end when you sell a policy. You're just getting started. Will Tesla be able to service policies well? And it's not just insurance you have to satisfy. Guess who else cares a lot about the insurance products you're selling? The regulators. Which kind of sounds like a hip-hop group. You've got 50 states overseeing every number and period and punctuation in your filing. Elon Musk does not strike me as a patient person. Is he going to have the patience and stamina to deal with the maze of regulation it takes to launch a carrier? I was originally going to say that it makes sense for Tesla to offer insurance because Tesla knows Teslas. But if they're insuring everything, there goes that, because then they would be introducing all of the risk of the entire automotive fleet on the roads in the US. But for the Teslas they do insure, they can help create the specific coverage needed. For example, Tesla's self-driving rideshare idea, the robo-taxi program. In this vision, hypothetically starting next year in 2020, any Tesla owner could activate their Tesla into the robo-taxi fleet at any time. Their Tesla would basically go on shift and work until the owner wants it back, which creates kind of an unusual risk profile. So it makes sense for Tesla to offer a product that covers that. And all the coverage and premium could be bundled into the insured's loan or lease payment, So there's a little convenience added in there that could potentially make up for the lack of home and life bundling that you would get with a typical carrier. But even if Tesla is offering revolutionary coverage options and insuring all vehicles, you know they're not going to have a huge book of business. At least historically speaking, insurance has been based around the idea of risk diversification. As an insurer, the more you can spread your risk, the better. Having a large number of homogeneous risks has typically been the opposite of the goal. Don't put all your eggs in one basket and whatnot. And beyond the risk aspect, there's just the market sizing aspect. Usually when you're sizing markets in insurance, you're talking about homeowners and drivers across the US. If you're looking at a market of Tesla owners further reduced by the number of Tesla owners who want Tesla insurance, that's kind of a small market space. Seems like it'd be difficult to get to a stable, profitable place with any economies of scale. Speaking of achieving scale, let's talk about execution, or lack thereof. Tesla has a pretty spotty history of execution. Promises made often go unfulfilled. Tesla also has some pretty questionable PR practices. Insurance definitely likes its kooky characters, but is Elon Musk a little too out there? I mean, the Tesla brand and Elon himself have a pretty passionate following and a lot of brand evangelists, but does this brand permission extend to risk? The appeal of Tesla is that it's exciting, sexy, cutting edge. Are those adjectives that people want to describe their approach to financial security? And here's the pro that I've been secretly wondering if it's not the true motivation behind Tesla insurance. Tesla could offer lower premiums and therefore put pressure on traditional insurers to lower their premiums. So is that what this is? A really expensive, really public game of chicken? I honestly don't know. If I had to place a bet somewhere along the spectrum of success from 0 to 10, I think I'd give it about a 3. What do you think? Is Tesla insurance going to win or go out in an innovative blaze of glory? Let me know in the comments, and don't forget to subscribe to the Insurance Nerdery for more nerdy awesomeness. I'll see you next time. Claims.